Good morning, student. Let us discuss our third accounting treatment relating to reserves and accumulated profits and losses. In the previous video, we have already discussed the various method to calculate new profit sharing ratio, treatment of goodwill. Now, the next topic is relating to reserves and accumulated profit or losses that is appears in the balance sheet. See, if at the time of admission of a new partner, there is a balance in reserves and accumulated profits in the liability side and losses appearing in the asset side of the balance sheet, then they will be distributed among the existing partners in their old ratio and will not be shown in the new balance sheet. See, this is why now the question arises why this balance is transferred only to the old partners, not to a new partner. This question's answer is new partner is not entitled to any share of such reserves, profits, losses, because these are the accumulated profits or losses of past years which have earned by the old partners. So the new partner should not be put to any advantage or disadvantage. Advantage means that reserves, that profit of past period, and disadvantage here refers to any previous losses not written off till the date of admission of a partner, that also will be borne by old partners only. As a result, they are transferred to old partners capital account or current account as the case may be in their old ratio. Now see, what will be the journal entry that we have already discussed in the chapter change in profit sharing ratio. Similarly, here also you will do the journal entry. All reserves that appears in the liability side of the balance sheet denoted by the name general reserve or any reserve fund or any kind of reserves, profit and loss, workman compensation reserves, investment fluctuations reserve. See, these two are the specific reserves, and the various possible cases relating to these two reserves, workman compensation and investment fluctuations reserves, we have already discussed while we were studying the topic change in profit sharing ratio. So if this type of reserves and in additional information there is no claim or there is no change in the value of investment, then all amount will be distributed among the old partners in their old ratio. See, this is what the entry you will pass, and compound entry you can pass if there are more than one items relating to reserves appears in the liability side of the balance sheet. And in case of losses like PL, deferred revenue expenditure, so then you will debit the old partners capital account and credit the losses, that is PL account, deferred revenue expenditure account. Means this will reduce the capital of partner, and profits reserves will increase the capital of old partners. So this entry is required to be passed at the time of admission of a new partner if such item appears in the balance sheet. So these items are going to affect only your partner's capital account, and in the new balance sheet these items will not appear. See, some important point you can point out. If what will be the effect of given journal entry? The effect of such entry is that balance of reserves and accumulated profit or losses will not appear in the new balance sheet of a reconstituted form, because it is already distributed among the old partners, and this will increase their capital, means it is added to their capital, not in the separate account reserves and PL account. And secondly, if nothing is mentioned in additional information, Then also this reserves and accumulated profits or losses should always be distributed even if the question is silent. So it is mandatory that any such item appears in the balance sheet, you have to transfer this money to the old partners capital account in their old profit sharing ratio. And regarding workman compensation reserves and investment fluctuations reserve, that we have already discussed. And if at the time of admission such reserves may or may not be required to meet the obligations, because if there is no claim regarding workman compensation reserves, or there is no changes in the value of investment, then you have to simply distribute that money among the old partners. And if there is such claim or any changes, so you just deduct that amount, and the excess of such reserves over actual liability, and actual liability will specified in the question. If nothing is specified, you just simply distribute it, and after deducting that actual liability, if any, is transferred to capital account of old partners in their old ratio. So it is better to you just refer the previous video that I already discussed separately in one video, workman compensation reserves and investment fluctuations reserves, various possible cases that we have already discussed. Now, based on this topic and along with the treatment of goodwill in the previous video, one question, let us discuss one question. There is a question like Ram and Mohan were partners in a firm sharing profit in the ratio of 4:1. This is their old ratio. On 1st April 2019, they admitted Sohan as a new partner on 1/3 shares in the profit of the firm, and they fix the new profit sharing ratio as 4:2:3. See, in new ratio is also given, old ratio is given. Then what is required, that you have to calculate the sacrificing ratio. Why? Let us see the question first. The profit and loss on the date of admission showed a balance of 32,000, and under bracket it is written debit. Debit means it is a loss. So if here it will be written credit, then it will be a profit, otherwise it is a debit balance, means it is a loss. And the firm also had a reserve of 1 lakh. Sohan is to bring 60,000 as a premium for his share of goodwill. Now showing your calculations clearly, pass necessary journal entries to record the above transactions. So this is what the pattern of questions that may be asked in the board exam also. So see what entries were passed. See, loss is debited to old partners capital account in their old ratio. So first entry is Ram's capital account debit, Mohan's capital account debit to profit and loss account, that is 32,000 in the 4:1 ratio. 25,600 debited to Ram account and 6,400 is debited to Mohan's account. And regarding reserves, reserve is debited and credited to partners, old partners capital account in their old ratio. Ram's capital account credited with 80,000 and Mohan's capital account credited with 20,000. So this is the first two entry that we have already discussed what we will do when these items appear on the date of admission of a new partner. Now see, regarding treatment of goodwill, because it is a premium method and cash is coming into the firm 60,000 as a premium for goodwill. So first entry you will pass that bank account debit 60,000 because it is coming into the firm. And premium for goodwill, as I already said, you just not involve goodwill account, you must write premium for goodwill account 60,000. And see here, only in the Ram's capital account it is credited. Why not to the Mohan capital account? So this for we have done the working note. While calculating the sacrificing ratio, only Ram is sacrificing and Mohan is gaining. So then it means कि only Ram will be credited with the amount of premium for goodwill, because Mohan is not sacrificing. Instead of crediting, he will be debited. See how. First you see this entry. I think this is clear to you why only Ram is credited with 60,000, because Ram is sacrificing, so whole amount that is brought by the new partner is credited to Ram's capital account 60,000. So this is now quite clear. And why this next entry is Mohan capital account to Ram's, again Ram is to be credited by the Mohan also. Why, you see, check it here. Mohan will also compensate Ram, as he is also gaining 1/45 shares in profit. That while calculating sacrificing ratio, this is the result. And Sohan's share in the goodwill is 60,000. On the basis of Sohan's shares, what will be the total value of goodwill by just reciprocal of his shares? And his shares was, he is coming on 1/3 share of the profit. Then by what will be the value of goodwill on the basis of his share of goodwill? That is 60,000 into 3/1. This is the way how the capital value, total value of goodwill is to be determined. That is 1,80,000. And his gaining proportion is 1/45. Then Mohan will compensate Ram, because Mohan is a gaining partner and Ram is a sacrificing partner. Then on 1/45th share of 1,80,000 is 4,000. So this 4,000 is compensated by Mohan to Ram. So that is why this entry is passed, Mohan capital account debit to Ram's capital account. So this type of case also you can see while calculating sacrificing ratio. If suppose any one of the partner is a gaining partner, then he also has to compensate to the sacrificing partner as per the proportion what is coming. For this you have to work out what will be the goodwill, what will the value of goodwill of the firm on the basis of new partner shares of goodwill, and then you have to show this entry. So this is what the cases, various possible cases, and based on these cases you will get a question in your board exam also. So you must be very much clear about this topic, about the calculation, about this concept of gaining and sacrificing. So this is what we have discussed relating to the accounting treatment of reserves and accumulated profit or losses. So in your book, NCERT book, few are the questions given based on this topic. Of course, you have to show the journal entries only. So you just complete your questions based on this topic. Thank you so much. Take care.